It was a quiet day on Wall Street where most market indices were up or down less than 1%. However, we did see the NASDAQ Composite and the Russell 2000 outperform the S&P 500 and the Dow Jones Industrial Average, which is generally viewed quite bullishly. It gives us the interpretation that the bulls are alive and well and willing to take on risk. Of course, we are in earnings season right now. We might even take a look at Intel and Starbucks after hours since they are reporting here this evening. And then I also wanted to take a deeper dive into the semiconductor industry, much in the same vein that we looked at the restaurant stocks last night. Several semiconductor companies breaking out here with some positive price action today. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's January 24th, 2019. First of all, if you're new to these videos, welcome aboard. Remember to go to our YouTube channel and click subscribe. And while you're there, in the description area, we have a link that will allow you to sign up for our email distribution list, which entitles you to not only receiving notification when we post the videos, but also gives you a heads up on what stocks in the S&P 500 are giving you overbought and oversold cluster signals. In addition to YouTube, we're heavy users of Twitter. My handle is @BrandonVanZ, and we would encourage you to click like and retweet if you get value out of these daily videos. We also have a presence on Facebook. Feel free to join our group at the web address embedded in the logo in front of you. All right, let's go ahead and take a look at the charts here. And as you can see, I've got chart 4B pulled up in front of us. As a reminder, this is just a foregrid to take a look at all of the key equity indices here in the United States, all on one screen. As we've been kind of reporting here recently, we continue to have a strongly bullish intermediate posture. Now remember, we are taking our cues from the indicator that you see down below each of the four charts, which is the market forecast indicator. And unless we say otherwise, our default mindset in these videos is to look at the green line in the market forecast, which is the intermediate term posture. And so when that is tilted higher and or above the upper reversal zone, we perceive that to be bullish. Now, if it is trending higher and between 20 and 50, we would only view that as weakly bullish. But if it's above 50 and trending higher, or just simply above 80, we would perceive that to be strongly bullish, and that is what determines the difference between the light green shading that you see here and the dark green shading that you see here. So, it's really been about 2 weeks at this point where we've had a strongly bullish posture using that market forecast indicator. Now, one thing that hasn't existed here up until recently is the fact that the moving averages are now curling higher as well. How can we identify that quickly using this chart setup? Well, just look at the moving average color. Notice that the moving average turned from yellow to green here in the S&P 500, also the Dow Jones Industrial Average, the NASDAQ Composite, and the Russell 2000 down below here. What that signifies is price is above a rising moving average now. Now, obviously, it's in that bottoming kind of position right now, so it probably looks flat to the naked eye, but if you were to compare where the moving average is today versus where it closed yesterday, technically it's just a hair higher, and that's part of that important bottom building process. There's still a lot of people that do not believe in this rally that has started since basically Christmas Eve, and it's been a very strong rally, up 12% or whatever we are on most of those indices from that time. And the more evidence that starts showing up on the charts of stability, the more that eventually some of those folks may become convinced. But at this point, we, of course, remain bullish like we have been for the last several weeks here, according to the market forecast itself. Now, one thing I did want to point out is what I mentioned in the intro, which is down below here on the NASDAQ. Notice it was up 0.68% today, and the Russell 2000 was up 0.70% today. So that is a healthy sign. It's a sign of willingness for risk-taking, and the thought process there is that if those areas can remain resilient, it will oftentimes kind of drag the mega cap names in the Dow Jones or the S&P 500 along with it, either up or down. So in this case, where we see a little bit of outperformance to the upside, it is generally cheered by bullish market participants. Another thing that I think is worth pointing out is that you'll notice that the market sentiment line is rising on all four of these charts as well. I know you can't see that all that well on this particular chart because it's kind of got that dashed orange line back there. We don't concentrate a lot of our conversation around it during these videos because it is a much longer term view, and many of you that watch these videos are much more active in the short term. But it is worth mentioning because, you know, late last year we did see that orange line kind of tilting lower and giving us bearish indications. In fact, we could do this to make it a little bit easier for you to see. If you come over here to our charting package, and again, I'm kind of looking at you guys that are, I'm referring to you guys that are the premium market scholars that have access to this. We do have another market forecast chart here. It would be chart 5A for those of you that want to follow along at home with me. Now, this is just a plain version of it, so no bells and whistles, doesn't have those fancy background colors or anything like that. But the reason that I'm bringing that up here is because you can now see that orange line kind of in its own separate window or pane down below there, and just wanted you to recognize that in the case of, in this case it's SPY, but if we focused on SPX here, which might be slightly different, you will see that the orange line is now tilted higher. It bottomed out right around that Christmas time period right there and has been working its way higher. It's now at about 30.91 and rising, and that is generally perceived positively because, again, that's the longer term version of these market forecast lines here, even longer term than the green intermediate time period that we typically refer to in the videos. And that is the case with all four of our major indices here. So that's another positive element of this bounce that we've received, and the longer that it continues, the more believable this bounce gets. So not only do we have, you know, the bullish posture according to the market forecast for the last several weeks on an intermediate perspective, we now can say the same thing regarding the market sentiment with it, which is a longer term look at that. And of course, we also now have price above a rising moving average. Now, in addition to all of those bullish sentiment items, we can also take a look at the 3 green arrows chart here, which is 4C. And as I've been mentioning in these videos this week, and we've been mentioning in prior weeks as well, we have 3 green arrows. So not only do we have strongly bullish postures across the board with intermediate and long-term perspective, we have price above a rising moving average, and we have 3 green arrows. In other words, these technical indicators that have nothing to do with the market forecast indicator are kind of confirming what we're already seeing with the market forecast, right? The 30-day moving average, the MACD histogram, and the stochastics are also giving us those positive vibrations. So again, maybe not ideal times, or it's hard to find ideal times to trade, but if you're going to be on one side of the trade or the other, it does make sense in this market environment, as much as you might not like it, because a lot of people get kind of hung up on, you know, the news and, you know, the government shutdown and this, that, and the other thing. The charts are telling you we're bullish right now. So whether we react to that or not is always up to you. But right now, of course, has been a very positive time to be looking at some of those bullish charts out there. Let's take a look now at the 1040 crossover, which doesn't give us quite as much exuberance on the bullish side. And the reason behind that is, according to the 1040 crossover method, which is a longer term view where we're using weekly candles rather than daily candles, and we're applying a 10-week moving average versus a 40-week moving average, we do still have bearish crossovers. And that's what that pink background color of all 4 of these charts is referring to here. But as I've been mentioning here in recent presentations, one key thing that the bulls can take away from this, even if they haven't quite won this battle yet, do notice that at the bottoms of the charts, our MACD2 lines is showing some pretty decent bounce potential right there. And when that black line starts tilting and pointing back towards that pink horizontal line, it's basically telling you that the 10-week exponential moving average is now starting to get closer to that 40-week exponential moving average again. And as long as price remains resilient, we would stand a decent chance of seeing a bullish crossover on this longer term view here in the coming, let's call it, few months. So we kind of are across the board in the same kind of environment there with all of those. Let's go ahead and take a look now at our 12 grid analysis. This will be the intermarket analysis 12 grid for E. And when you're looking at these charts, just as a reminder, the green background color will tell you whether we have a bullish posture on the intermediate line, and the pink background color will tell you if we have a bearish posture using the intermediate line. So One thing to be aware of, the VIX. The VIX is obviously very important security or chart that you want to take a look at if you are an options-based trader. We were down again on the VIX, so it's kind of interesting. We were up about 16% on the VIX here a couple of days ago, and we've nearly given all of that back in the following 2 days. So what would have appeared to be some fear entering into the system, and I emphasize some because we were still at the lower half of the range despite that 16% move up, has already given way to a lack of fear. Once again, right or wrong, professional traders right now do not have a lot of fear in this marketplace. There's not a lot of volatility out there. They're kind of assuming that things will figure themselves out, whether that's going to be the China trade wars or the U.S. government shutdown or whatever the worry of the day might be. If traders were truly worried about that, leading to some sort of major meltdown scenario, they would be buying up puts, and that would be reflected in the VIX, and we're just simply not seeing that at this particular juncture. One thing I did want to point out, and we did talk about this today a little bit in my question and answer session, for those of you that premium market scholars, the US dollar had a nice bounce back today, and I was not expecting that. Right? Last night we were talking about that US dollar bouncing down off of that moving average, and my thought initially was that was going to lead to resistance. Well, we bounced right back up today, so it's not going to give up the ghost quite that easily, it appears. So UUP was up 0.59% today. That's a pretty healthy move for the US dollar, and it puts us right back up where that moving average is again. So don't count the US dollar out quite yet, although it does seem like the path of least resistance continues to be to the downside for the dollar, since we do have that moving average continuing to go lower. As you can see, it's colored in red right there. As just a quick heads up of the other things that we did discuss in my question and answer session here today. Let me pop on over to the internet for a moment. The recording of my Q&A session is now posted for those of you that are premium market scholars that want to check that out. We had a conversation about Westwood Holdings Group. We had a conversation about McCormick. We had a conversation about, how do we manage a long-term dividend growth investing account. We had a conversation about Gilead Sciences. We had a conversation about earnings strategies, how to trade through an earnings announcement. We had a conversation about Eastman Chemical, and we had a conversation about gold and how Warren Buffett and Charlie Munger are typically not the biggest gold bugs out there, and the reason behind that. We also had a conversation about some of the differences between individual ADRs and the foreign investments that come within the ETFs that track international markets. We also had a conversation about if we should have some minimum volume requirements when we're trading stocks. And then we had a conversation about Altria as well. So a great, well-rounded group of questions there today that you're welcome to sink your teeth into if you so desire. Also, while I'm over here on the internet, just a friendly reminder that if you are watching these videos on our website, remember you can do so on the blog area. We do try to make it nice and easy for you to kind of engage with us on social media. If you get value out of these videos, we simply ask you to click like, right? That's all there is to it. If you don't get any value out of them, don't click anything. But if you do get value, one way you can let us know about that is click like here on Twitter. Thank you to the 80 or so folks that did that for me yesterday. And then you can also give us a thumbs up there on Facebook. Quick heads up as far as what sessions we've got coming up for those of you that are Premium Market Scholars subscribers. Remember, David has his popular technical analysis trading room tomorrow at 11 a.m. Eastern Time. Then he's got his Q&A session on Saturday morning, and then we're back to some of my classes on Monday with top-down trend trading. All right, let's go ahead and take a peek here at another set of 12 grids. In this case, let's go to 4F. And this is going to be our foreign stock markets 12 grid. And as you can see, we've got mostly green charts. So again, that's a positive sign. We did see a few of these markets outperforming. In fact, China was up 1% here today, remains in the upper half of its range over the last 3 months. So we had that conversation in yesterday's presentation about how the BRIC nations are proving to be quite resilient. in all of these cases, whether it's the Brazil chart, the Russia chart, the India chart, or the China chart, all of them are currently trading in the upper half of their 3-month ranges. Whereas some of the more kind of, developed markets like Germany and United Kingdom are kind of at the halfway or lower mark there. So they're trying to stabilize. But I will point this out. You'll notice that the United Kingdom and Germany both have those green moving averages now. So kind of like the United States, we're starting to see stability with the developed markets to the point where we now have price above a rising moving average as well. So some strong developments there with a lot of those foreign markets. I did notice that South Africa had a very nice day as well. We've been talking about them and some of the gold mining companies there in South Africa recently. Noticed that South Africa was up about 1.15% today, and looks like it's gunning for a possible breakout. We'll just have to keep our eye on it, but it's right up there in that zone where it wouldn't surprise me at all to see a breakout occur with South African securities here fairly quickly. Let's go ahead and take a look at our next 12 grid now, and this will be the U.S. sectors 12 grid. All right, and this chart 4G, and as you can see, green backgrounds across the board, meaning that we do have bullish postures using that intermediate line on the market forecast on all 11 of our sectors. Now, I don't know if you guys caught the news, but we've been talking about PCG, the big California utility, and its impact on the utilities sector in general recently. PCG had some interesting news come out regarding it, and its stock just really skyrocketed here today. In fact, let's see, where did it end up? PCG was up 74% today. Now, obviously, that particular stock has been absolutely blasted in recent weeks, as its 52-week high is at 49. So we don't want to make too much of it. But obviously, a 74% move from a utility is not something that you see every day. And you can see down below here with the utilities, that was enough to push the entire utility sector up and over that moving average. So that was a positive sign there, a continuation after several days of upside movement we've seen out of those utilities here recently. So that was one of the lagging sectors recently that's now starting to kind of catch up to some of these other sectors that are out there. Obviously, the utilities are more of a defensive kind of risk-off mindset traditionally, so that's not necessarily the best sign there, but it is good to see that they're kind of participating in this rally a little bit more so, as opposed to just sitting on the sidelines watching all the other sectors go up. As you can see here, technology was up 0.84% here today, and that might have been the best performer. As I look at them, yeah, I think it was. So technology was the best performing sector of the 11 here. I wanted to kind of discuss the semiconductors, as I mentioned in the intro. Just like I kind of rattled off a bunch of those restaurant stocks yesterday that I had been noticing have really been starting to pick up some steam, the same thing can be said for the semiconductors. In fact, those of you that follow me on Twitter might have seen some of the conversation I was having with Dan Russo over at Chaikin Analytics here last week. We were both noticing some of these breakouts amongst the semiconductors. I think Curdy and a few of our students were kind of chiming in with some of their favorites as well. And, that continues to be the case. Let me show you SMH right here. This is the VanEck Vectors ETF for semiconductors. And this is one heck of a candle right there. That is a 5.89% move that we saw out of the semiconductor ETF. Remember, this is not just one single semiconductor company. This is an ETF that tracks dozens, if not hundreds, of semiconductor companies. The entire space was up 5.8% today. So, without a doubt, that technology sector was certainly being aided by the semiconductor and semiconductor equipment industry group within the technology sector here today. So that was a big move from the overall sector. One of the big reasons for it, Xilinx. Xilinx has been one of the workhorses within that semiconductor area. You'll notice that Xilinx was up 18% here today off of their earnings announcement. So that kind of drug the entire industry group along with it. But it was already trading above a rising moving average just earlier this week. So it wasn't like it was a dead cat bounce or anything, or anything along those lines regarding the 18% move that we had. Remember, sometimes you'll see a stock like a PCG that was just absolutely trampled. And then when it does rise, a bunch of the shorts are scurrying for the door all at the same time. And that creates that outsized price action to the upside. That does not represent what was going on here with Xilinx. Xilinx was already trading above a rising moving average and then added an additional 18% above it. Of course, you've now got your bullish posture there to contend with as well. KLA 10 core, ticker symbol CLAC, was another big winner here today from that space. It was up 7% and does have that bullish market forecast posture. LRCX, this is Lam Research, another big winner here. 15% to the upside. That's a $21 per share move that we saw out of Lam Research here today. Of course, retaining that bullish posture there as well. AMD, one of the big winners from last year, but one that has cooled off in recent months. So for those of you that have followed the story, you might know that AMD was one of the best performing stocks in the S&P 500 in 2018. But the biggest portion of that outperformance occurred in the first half of 2018 and spent the second half kind of giving back some of those gains. Well, you can see AMD didn't want to be forgotten about today either, up 5.3%. NVIDIA, another big kind of growth stock from prior years, was up about 5.7% here today and has that bullish market forecast posture. Texas Instruments, which is actually a stock that we just bought in my dividend growth investing class on Tuesday, had a really nice day. It was up 7% here today. Of course, one of the big behemoths within the semiconductor space. Avgo or Broadcom hit another 3-month high here today. It was up 2.3%, continues to have that bullish market forecast posture. We also had Micron, up 6.8% today, a nice bounce move there. Does have that bullish market forecast posture. ON, which is ON Semiconductor, another one kind of like Micron there, where you had that nice bounce and cleared out some of that resistance right there. Continues to have that bullish market forecast posture there as well. And then the big dog, which is Intel. Now, this brings me to my next conversation, which is Intel had a great day here today, up 3.8%. Remember, this is a $100 billion plus type of a company, so a 3.8% move is equally as important as, let's say, a 15% move out of something like a Lam Research or a Xilinx, because of the impact of market cap in most of the indices like the S&P 500. So Intel had a beautiful move here today, another one of those kind of pullbacks in the stock in recent days and then bounce higher, clearing some of those resistance areas. The problem is this: they did have earnings here tonight, and the last I checked, at least before I hit record on this presentation, it was trading lower. So let's take a look at the damage here tonight when Intel reported their earnings, and it continues to trade lower. So be aware that the semiconductors in general might take a little bit of a hit tomorrow, but if you like some of those names that I just rattled off right there, remember that many of them will probably be down in sympathy with Intel tomorrow, but could very well be setting up for nice bounces moving forward beyond that once the market learns to separate the other companies from Intel. But it is true, Intel is down a couple bucks per share here. In fact, $3 per share. It closed at $49.76 today in the regular session and is currently trading at $46.60 or thereabouts in the after hours session. So that might pressure the NASDAQ and the semiconductors specifically tomorrow. We'll just have to see how it plays out in the overnight cycle. Now, on the other side of the equation, Starbucks also reported their earnings after hours. Talked about Starbucks a little bit yesterday when we were having our conversation about restaurant stocks and kind of recognizing some of the resilience there. Starbucks is trading up a little bit. Now, not tremendously, but it is up. It closed the regular session at $64.74, and it's currently trading just a hair above $66 per share. So as of right now, it appears that investors like what they see coming out of Starbucks, don't quite like what they see coming out of Intel, but we'll We'll see if that changes coming into tomorrow's regular session open and after some of the conference calls and CEO interviews and all that kind of fun stuff as well. All right, so let's now talk about our trade application example. And I'm going to come back over here to chart 4A. Last night, you'll recall we talked about Papa John's, and that one worked out nicely. As you can see, Papa John's continued the move. The idea there with Papa John's in yesterday's presentation was this big move higher. That was a massive engulfing candle that engulfed most of the candles from the prior couple of weeks, with the recognition that a lot of the other restaurant stocks are really starting to perk up here recently. So it's great to see Papa John's continue higher by about 2% here today. In fact, something to report from that perspective as well. Notice how the background color of the chart went from light green to dark green here, telling us that we now have a strongly bullish posture using the market forecast intermediate term line on Papa John's. Well, tonight's trade application, I want to stay in that same restaurant space since we are seeing so much positive activity there. This one is Arcos Dorados, and this is basically a McDonald's of Latin America. Now, it is not the McDonald's, but it is a group of lots and lots of McDonald's in Latin America that you can trade separately from the main McDonald's, which of course trades under ticker symbol MCD. So these are some of the franchisees that have kind of pooled their assets together to kind of form their own separate company. And that goes by ticker symbol ARCO. Now, this is a lower price stock, so we've got to be careful with it. It is a little bit of a riskier stock, I would say, than something like kind of the bellwether of McDonald's itself. But as you can see here on this 3-month chart, it has been very strong, just like so many of those other restaurant stocks that we talked about last night. We did have that little bit of a pullback here in the last couple of days, but you'll notice a really beautiful breakout and a really beautiful candle that we had here where we closed effectively at the highs of the session. We engulfed those candles that were coming before it, which is a positive sign as well. And of course, we didn't ever lose the moving average. In other words, once we've got above that moving average after this kind of bounce in this area back in late December when the whole stock market was really starting to capitulate there around Christmas Eve, would have been that candle right there. We saw this thing start to take off and get above that 30-day moving average, and it hasn't looked back. It hasn't closed below that moving average since that time period. So that's a strong sign that we see right there as well. The other thing to be aware of is, well, some of you might not be quite as familiar with this one. It has been trading for a while, so it kind of gives us a sense of what is possible with this particular security. I'm going to go to a maximum chart here so you can kind of get a sense of that a little bit better. And you'll notice that when this thing did its IPO, it was back in 2011. So this now has about 7 or 8 years worth of trading history that we can look at. And for the vast majority of time, this thing has been in a downtrend here, as you can see. So it really didn't start to bottom out here until basically 2016. And since then, you can see that we've had more green to the right-hand side of the chart than we did back here. This was dominated by the bears. That's the first half of this company's existence. The second half of this company's existence appears to be owned by the bulls. However, the bears do have, every so often an opportunity to win here and there. But for the most part, it does seem like the sentiment around this stock has changed and is more favorable towards the bulls right now. So let's go and zoom back into a 3-month view here again. And what I want to do in this particular case is kind of handle this like a trend trade. And I want to give myself a wide amount of room to be wrong, because remember, we're dealing with an $8.78 stock here. These things can move around quite wildly. So what I want to do is I want to put in a trade where I have a stop loss that is below where we were trading back here when it bounced around that Christmas Eve time period. And so that was down there at closer to, let's call it about $7.50 or thereabouts. So what I think I'll do here in this case is buy this stock with the assumption it will continue to go higher because we're in a strong trend here, and an object in motion tends to stay in motion. So that's the assumption. Of course, that can obviously go wrong as well. But we'll buy this, and we'll put $1.50 stop loss on it, trailing stop. And what that will allow us to do is keep our risk at about $1.50, but allow us to participate on further upside. Now, if this thing turns around immediately and comes down here and breaches those sells, we're willing to say, yeah, we were wrong. Let's move on and find a different trade. But if it just continues to meander its way higher, you never know, right? This thing traded as high as, what was it, $29 at one point back in 2011. So this isn't your typical $8 unknown stock. This is a stock that is associated with a global brand with McDonald's, and you never know when it kind of gets its mojo back a little bit more. So anyway, that'll be our trade idea here. I'm going to right click on the chart. I'm going to go on over here to buy custom with stop. And I'm just going to leave it with the 100 shares here. Of course, you're going to have to position size whatever is right for your account. I'm going to click that little paper clip right there that allows me to kind of lock those two orders in place. I do want to kind of set a, let's call it, I don't know, $8.88 limit, because this thing could gap up tomorrow. We never know. It's after hours right now, so you never know. But I'd be willing to spend up about 10 more cents than where it closed here tonight at 8.78. Now on the stop portion of the trade, what we need to do is come over here to where it says stop. I'm going to click on that, and I'm going to change that to trail stop. And then to the right of trail stop, I'm going to choose good till cancel rather than day there in the pink. And then on that bottom line where it says plus and minus right there, I'm going to go ahead and type in minus 1.5. And that means that we're going to have a trail stop that will constantly trail that security by $1.50 per share. So our hope is that the stock goes up. But if it does not, eventually, if it goes down at least $1.50 per share, we will be stopped out at that particular point. So that's, I think, all we need to do to adjust this. So let's go ahead and click confirm and send, review it one last time, and I'll fire that off and see if we get filled tomorrow. All right, well, I want to thank you for joining me here tonight. It's been a pleasure to go to work for you once again. Remember, David will be back with you tomorrow. So remember that I'll do my sector selector tomorrow afternoon. For those of you that want to kind of see what's going on with sector rotation, I'll post that on Twitter and on our blog and different things like that as well. But until I see you next time, I want to wish you all the best of success with your trades and your investments. Goodbye for now.